Hello and welcome to this session in which we will discuss letter of credit. A letter of credit is a corporate banking arrangement between a company and their bank. It's simply put, it's a document. It's a piece of paper issued by the bank that guarantee sellers would receive the buyer's payment on time and for the full amount. What are we saying is this? The bank is guaranteeing to the seller that if you fulfill your agreement with the buyer, we will pay you. It's used in international trade for what purpose? To reduce the risk for the exporter and the importer. What are the risks? Think about it. If you're an exporter, let's assume we have a US, a company, and a Chinese company. Let's assume the US is buying from China, buying goods from China. Now, the exporter in China, they fear that the US will not pay. That's their risk. Is I ship the product, the US does not pay. What am I going to do? I'm going to fly to the US, file a claim, so on and so forth. That's a lot of work. The party in the US would say, well, if I pay and the Chinese company doesn't ship the goods, well, I paid for something that I did not receive. So you see the risk here. So we're going to introduce the letter of credit to do what? To eliminate that risk and facilitate international trade. So let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, FarhatLectures.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses, broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today.
So let's assume we have two parties, a buyer and a seller, decide to a sale and decide that the payment will be made via letter of credit. For the sake of simplicity, let's assume we're between a German and a US company. So we have a US party that's buying and the German company. And we're buying auto parts, or simply put, parts. So the US is the buyer. Now what's going to happen is this. The US individual, let's call them Tom, and the German is Michael, just to kind of make this a little bit simpler. So Tom will go to his bank and they will ask their bank to issue for them a letter of credit. They will tell them, I'm buying auto parts from Germany. I need you to issue me a letter of credit. And you will send it to Michael's bank in Germany, letting them know that I have the money and I will pay my bill as long as I receive the product. And you are the bank, you are guaranteeing this agreement. So the issuing bank review the application. Obviously, I would assume that Tom and their bank, they have a good relationship. If they agree, they would issue the letter of credit. Then they will send the letter of credit to the seller's bank, known as the advising or the confirming bank. That's the bank that's in, you guessed it, Germany, which verifies the creditworthiness of the issuing bank and the authenticity of the letter. Now, the German bank, most likely, they will have a relationship with this US bank. They'll say, okay, great, I'll take your word for it. Then what's going to happen? Upon the receipt and verification, the seller ships the goods to the buyer. So Michael in Germany, his bank will contact him and say, okay, yes, you can ship the goods. The payment is, in quote, guaranteed as long as you ship the goods. And what would Michael do from Germany? Ships the good. And Michael would run to the bank immediately after shipping the goods and provide them the shipping document to their bank, to the advising bank in Germany, which proves that the goods have been shipped as per the agreement. Well, if that's the case, the advising bank review the document for compliance, and if the documents are in order, the advising bank in Germany, they would say, great, here's your money. Now Michael got their money. They're happy, they were paid. Why? Because they fulfilled their agreement. What's their agreement? Is to ship the goods, which they did. Now, let's talk about the reimbursement. The goods are shipped, and upon their arrival and approval by the buyer, the issuing bank then reimbursed the advising bank. So once the goods are shipped and they arrive, the buyer inspect them, look at them, the issuing bank would reimburse the German bank. Then the issuing bank, the US bank, will reimburse the German bank. Now the buyer, Tom, pays the bank. Or most likely they have an account in that bank, and the bank will withdraw the money from their bank account and they'll give it to the bank. Finally, the bank will give the shipping document to the buyer, say, you know, now you can claim it from the carrier. You can tell the carrier, I paid for it, please hand me the goods. So what are the benefits for this line of credit? Well, it reduces, as we mentioned earlier, the risk between the seller and the buyer as long as everything is in compliance. The seller will get their money. It assures the buyer that the payment will not be made unless the bank confirms that the seller has met their terms, which is what? Ship the product, which typically include providing proof that the goods are shipped. And there are various letter of credits because it's a contract base. Revocable, irrevocable, confirmed, unconfirmed, transferable, standby, all sorts. Irrevocable letter of credit and confirmed are the most secure types as they cannot be changed unless all parties, including the banks and both the buyer and the seller, agree to the amendment. Those are the strongest. Simply put, if you have irrevocable, you can be assured you will be paid because it's irrevocable. It cannot be changed. What should you do now? You should go to Farhat lectures, look at additional MCQs, additional resources that's going to help you prepare for your CPA exam. Invest in yourself. Invest in your career. The CPA exam is worth it. Good luck. Study hard and, of course, stay safe.